This is your morning brief for Monday, April 8th. Brent crude is up over $70 a barrel. To give you context, in October it was about $84 a barrel, plummeted to about $50 a barrel in late December, and has, I guess, come back fairly quickly, but not as quickly as it dropped. So, working its way back up to a more normalized price. I think 50 was definitely too low. 70s, I don't know. I'm no expert on what the world price of oil should be, and it's a very difficult commodity to predict, as many of the commodities are. So it is what it is, and it means that oil companies are doing better than they were in December. It's really that simple, and the stocks are starting to act like that. So that's awesome. I'm, a big proponent of renewable energy, and I think in the long run we're going to get there. It's not as simple as it sounds, and it's probably not even in my lifetime. Hopefully the next generation lifetime we can get ourselves off fossil fuels, but in the meantime there's a bit of a play here, and I think now looks like a pretty decent entry point into energy or oil and gas. A couple of examples. Continental Resources was up 4.4 on Friday. Yangarra Resources, which we've talked about and did a report on, there's a bullish case for Yangarra right now. Shares are moving up, and they tacked on another 5.5% on Friday. Still looks good to us. And Crescent Point, for the first time in many years, is actually starting to look good again to us. We have not been a big proponent of Crescent Point, even in the really good times. We just thought they spent so much money, and the returns just were not coming back at the expected rate. And I'm going to show you this one briefly. We're not going to do a full report here because it's a morning brief, but that was not the right graphic, as you can see. But we're going to forge ahead here. Here's the right graphic. Okay. As you can see, return on capital was very low. It did get up to 7%, but petered right out. Went all the way down to negative. I can't even see the negative 11. That's pretty bad. But they did put a lot of capital work. So this bottom graph shows the capital growth. You can't see the total capital, but right here it's $30 billion. Okay, even in 2011, which wasn't that long ago, was 9.7 billion. So even between then and now, it went from 9.7 billion to 30 billion. So that's a big capital spend, and returns were just so lousy. Now, a lot of this wasn't their fault. The world prices were terrible. The Western crude prices were even like Western Canadian Select, I think that's what it's called, was even worse. Is normally the price they're getting. So wasn't great. Now, I do see a little bit of a return improving here. In fact, it's positive. It's gone from negative to positive here. So that's encouraging. You got to at least think, okay, at least operations have stabilized a little bit, and it's fairly cheap. So for the first time in a long time, we're actually starting to nibble away at Crescent Point. Now, that doesn't mean we're just going to back up the truck. It does look good in the valuation model, that's no doubt, but it's cyclical too, so that's not always captured in our model, but it is. As an analyst, we can kind of think about it and go, okay, do we really want to go whole hog on a cyclical? It finally looks good. It doesn't mean we just back up the truck. It means we start to nibble at it, start to learn more, start to get in. So we're in a little bit in some of our model portfolios. Great to see it up. What did I say? 6.9% on Friday. 6.99, almost 7% on Friday alone. Okay. In other news, NCAA Men's Basketball Championship game tonight. Texas Tech versus Virginia, capping off March Madness. Another great tournament. March Madness, as usual, lived up to its name, and I'm looking forward to the game tonight. I have no particular favorite in my mind who I'm rooting for. I just want to see a good game. So look forward to that. That's your morning brief for April 8th. Let's go find some more gems.